Well, hi guys. You know who I am. Most of you know me. So I don't really want to go through all this because I've done that quite a few times.
Sure.
And you know me, and most of you know what I do. I started with David ever since he started this trade the fund. Been with him before, like many of you do with APRE. And and there we are. We did I did the the famous Anubis EA that most of you guys have seen it and used it. And I've been doing a lot of programming and fixing and doing stuff. So so you know me much about about what I do here for programming. So David, see where is the it's cutting off the oh, there it is. It cut off the, let's see if it will show up in slide. No. I guess we have to do without the fancy slide thing. What am I going to talk about is what David has been telling me on the boot camp. What's your plan? What's your plan? What do you want to do? So, and it's a good question. Oftentimes we think we know our plan. We think we have a plan. And oftentimes we don't have a really a detailed or a solid plan to begin with. Okay, and then what happened is with the execution, you start changing your mind because you don't have a plan. So you have to have a plan. You have to have a detailed, thorough, well thought plan. And David is teaching that. I mean, he goes over that time and again. And also execute, do what you plan to do. So it takes time. It's easy to see that, yeah, I can do it. But once you do it, you'll find out that you fail the execution, or the execution is not to the level that you want it to be. And we're dealing with money. We're dealing with fund. We're dealing with things that when we're competing with the best traders in the world, I mean, we're not trading against, it's not easy. The guys who are trading against us, or we are trying, sometimes we try to attach ourselves to the gurus. I mean, these are big guys. They have experience. So it's not an easy thing to take it lightly. You know, anything you deal with trading, it's very, very specific. Any mistake will cost you grief, will cost you, and can also cost you money if it's real money you're trading. So you want to have a plan. You want to know what you want to do. And so toward the end, I will tell, I'll tell you guys what did I learn from this. I tried to watch the recordings of the boot camp and others, and I realized that actually when you are listening to David, even when you are in a hot seat, you really don't grasp or comprehend everything he says. Now that I watch it back, I say, yeah, why did I do that? Or I don't remember, that point, because you get like distracted when you are doing the class or whatever you're doing in trading and answering questions. Oftentimes, I noticed, at least in my case, I get like on the defensive, missing the point. He's driving to a point, And I am kind of trying to defend or so unnecessarily just going sideways and missing the point. I mean, he's trying to actually drive a certain point, and it's not coming through, even though you're listening, you're watching what he says, you know. But when you watch the recording one more time, you can see that. You can see, what was I doing? Why am I, you know, missing the point of what he's saying? So my recommendation to any of you is, if you are in this situation, you are being in a hot seat or a session of that sort, to go back and listen to it once or twice, so you can get the actual points that he's driving to. And oftentimes those points just get you know, skipped or overlooked. So I was able to see that clearly when I watched the recording. It's say, yeah, what was I doing? What was I thinking? Because emotionally, sometimes you get on the defensive. Oh, you said that. No, I really didn't say that. Oh no, it's beside the point. That's not the point we're talking about. Not, you know, that there's a certain point. So and you miss that if you, I mean, emotionally, or just because we all humans, it's just we behave, our emotions drive our actions oftentimes. So that was one observation I've seen when I went back and looked at the recording. So, and he told me time and again, "What's your plan?" So I figured I will call this presentation, "What's your plan?" Right? It will remind me with that when I'm thinking, okay, when I try to trade or improve myself and get to a better habit, better trading process or system, to keep that in mind. Okay, what's your plan? What is it you want to do? So when I'm thinking about, okay, what's my plan? What is the plan? I say, okay, the first thing, you need to go over your market analysis. That's what, because we are basically charters. We're not fundamental traders. We don't go and read all the reports, and we don't do that. We just do we just do technical analysis. We basically are charters, and so what we do is we look at the market. We try to figure out the market, doing analysis, finding the market structure, the trend, the price cycle, what's the bias for the market bias, what the KPIs, which is key price indicators. So it's basically support and resistance points or major pivots. And where is our trading zone? Is it a place we want to trade? And where is our zone? Where is our basically playing field that we're gonna trade with? So that's, in general, you have to do that. Once you define that and say, okay, next step is, okay, how am I gonna execute this? How am I gonna play? So you have to have a plan A, a plan B, and a plan C, as these are like more or less our group definition, David's definition of these are not universal definitions for specifically for trading. It's, we have a certain meaning for them. And after probably 4 years of this, I hear this, I still didn't know the difference between the two. I thought plan A and plan B, one of them buy, the other one sell. When you flip and go to the other direction, close and reverse, that would be plan C in my mind. That was stuck in my mind. And David figured that out and said, you're probably thinking this way. And I said, yes. And actually. So he explained what's the difference between the two, and I'm going to try to explain my understanding, my current understanding of what plan A be. Plan C, well, we all know plan C. We are experts with plan C. Which means see you later. Now yes, please. The execution of, now that you made your plan, now you need to go to execute. You want to trade your plan. You made a plan, you want to trade your plan. And you need to have a mental preparedness, so you are ready to do the work. You are emotionally ready. You're not under stress. You did not run. You're not stressed out from something else and bringing it in because it's not going to help. You need to really focus and be ready. You need to know what to do when, or what to do if. You plan for options that's going to happen, not for what's going on. You want to plan for what if the market does this, or if the market does that. Have those scenarios in your mind, maybe draw them on the chart, and also have a mental image of that, and know what to do when. What? Okay, so we're trading what we react to the market. Basically, we anticipate what the market is going to do, and then depending which way it goes, we act. We should know how to act. Whether it's whatever action we're going to do, whether we're going to buy or whether we're going to add a trade, we're going to quit or hold or take profit or secure, whatever. There should be an action pre-planned. So you say, okay, if it does this and this and this, that's what I'm going to do here. That's what I'm going to do here. And the other thing is, do it. Okay, don't hesitate. Just do it. Okay, if you decided that if it reaches max, if this is my maximum profit, if it goes this way, I'm going to exit, then exit. You know, don't just wait when it gets there. No, maybe no, just exit. Just do it. So this is what my understanding, my own understanding of what the plan is. So, okay, so we go to plan your, plan your trade. That's a typo here. Plan your trade. Okay, there are, when you plan the trade the way we do it here in this group, we have basic elements that we go through first before we define what plan A and B or C. So before we do, we have basic elements like, the price cycle, the lot size based on the price cycle that and based on our account value and all that. We have to define the layers, how many trades per layer, number of trades per layer, define what is our early, mid, and late game. How are we going to build? How are we going to fade techniques? And what's our exit strategy? Securing, closing, that has to be, that's generic regardless whether you have plan A or B. They're different. Each set is different if you are in plan A or plan B. And excuse me. And you guys are quiet. When I was in Germany, no, I was in Holland school, and the teacher always came and wrote on the blackboard. He started writing a lot of like differential equations, statistical numbers, and big formulas, kind of like. And he always said, okay, all you have to do is start with hocus pocus things, and everybody is quiet. So I hope you guys understand what I'm saying. I'm trying to break the ice here. I see you guys completely quiet.
Well, we don't want to interrupt. So that's probably why, I mean, that's why I'm not talking to you. Just like, I just
I
don't
know,
want to
I just want
interrupt.
to break the
Right.
ice a little bit. So those are the basic elements we do. We call them 1, 2, 3s, and well, this is what we do to begin, kind of like an overall items that we do. And then you have to start with your plan A. And now that I have became an so-called expert with plan A and plan B, I hope, I don't know, but I think I do, I know. With plan A, once you made up your mind with your anticipated market, you think the market is gonna go long, or it's easier to trade with the long side rather than short side because of whatever consideration being following the trend, or there's a market structure, an M or a W, something that will tell you that it's a higher probability that it's going to go this way. So you made up your anticipated plan for what the market is going to do. Then you have to define your action points and your entry level. So where are those action points that you would enter? You'd have to set your number of trades per level. And whether you want to enter or hold. So you want to say, okay, if the market is going quickly against me this way or going this way, I'm gonna hold. This is the first, second, third, 0, 1, 2. This is the first time. It's probably, you know, I'm not gonna trust it. If it's second time, I'll just wait, hold. If it's a third time, I rather build on it and take advantage with, try to ride the wave. And do exactly what don't hesitate, don't change your mind, don't, unless you see something that is broken. And you should have anticipated that from the beginning. If it fails to cross this line, if it fails to cross that line, then yeah, then now there is a change, there's a different option. You should have a plan for what is it you're gonna do if it fails. So you have plan if it's going your way, but you also should have a plan if it doesn't. So you have to have in mind what are the potential market moves and what to do for each option. Okay, where is my break-even line? Where is my profit potential? Whether it's closing at break-even line. And plan B, plan A, you plan on to go and build and actually make your goal. That's your plan. You're more relaxed because the market is expected to go your way. But look for maximum profit just in case, because like if it makes a move and you know this is the first time, first touch, maybe it's good to just take your profit and wait for a pullback and go back on again. Have that plan in mind ahead of time and just do it. Whatever you make plan, just do it. And take the action at each one. And basically, it's more like building when it's on your plan A and it's expected, the market is expected to go in your way. So basically, you add at pullbacks, maybe at certain levels after confirmation, you can secure so you can add more. Because once you secure, you free much of your bullets to use. And then if we have plan A, then there's plan B. And plan B is when the market goes against you, not necessarily that you are reversing direction. No, it just the market, you anticipated the market is going to go long and you entered long trades and the market just went the other way. And this happens just about 90% of the time. So you have to implement what we call fading strategy. You have to start fading, or basically trading against the direction of the market move. A difference from from A and B. On A, you would wait for pullback and add, build. On B, you will add trades when appropriate, like when there is a confirmation or at a better location. So you are more careful of adding. You don't hesitate to add, but you add for bring your break-even line closer to a point where now the market is moved in a different direction. Now you want to make sure your break-even line it works accordingly. And in plan B, you know some of the trades you entered at first. The first set of trades is probably now a giveaways. You'd have to sacrifice those. You want to make it up by adding, by fading, adding to your fading. And you have to know what the options are. What are you going to do at each move? Or you have to define your closing calls now. Is it the break even? Depends on how heavy you are. What's your profit potential if you can make profit? Where is your maximum profit levels? And take advantage of those. If it happens, the market gives it to you. And your decision would be, okay, I want to take my max profit and enter again. Just do it. And define the action at each level and add after confirmation. So you want to be more careful to add when you are with plan B, because you wanna preserve your bullets. The market is going against you. That's more pressure than when the market is going your way. Plan C, well, it's when you decide to quit or call it a day and take a loss. If your KPIs are broken and you don't know what to do, or there's a major KPIs that are broken now, you have to exit. Maybe you would exit now, take a 1% loss or 2, and then try again with reverse, maybe. Fight it. Or if you tried win while losing few times and they failed, like David said that he tries 3 times, and if none of them work, he's not in tune with the market. It's not his day. So he takes plan C. Or if for any chance news or something went crazy and the market just got you your max risk, be it whatever percent you have a max risk, and you just reached your max risk and that's it. It's a cutoff. I reached my max risk. I'm out today. So see you tomorrow. So that's plan C. We all have run through this one way or another. Well, it was like 3 days of this. And what did I learn? Or what are the main things I learned in this boot camp? First of all, I got a better clarification of what is actually plan A versus plan B. That when David talks about that all the time, I had those a little bit confused, plan B with Top Gun and reversal and things like that. It wasn't really clear for me. So that I learned. I think I learned that. The other thing I learned is don't be shy to trade as you plan to trade. Like most of us, at least me, when I start trading, I throw in one trade and see what happens. Well, when you throw one trade only just to see what happens, it means you really don't think the market is going your way. You don't have an idea what the market is going to do. It's like, well, let me see what happens. And that's what I do most of the time. I just throw one trade and see what happens, or hope that it will go, then I will add. And then, yeah, it goes my way, and then it goes my way, and it goes 1 or 2 price cycles, and I'm still at 0.05, right? Well, with David would have started at 4 trades out of the bat because he believes the system. He believes that this is a good place for entry. The plan is have a good potential. He goes with 4 trades, it pulls back a little bit, voila, he puts another 4 or more. And by the time it does 1 or 1.5 or 2 price cycles, he's done. He's got his his goal, even though we're doing the exact same thing. There I'm sitting with 0.03 and 0.5, and he's at 0.27 in my case. Why we did the exact same thing? I started with 1 trade because it doesn't show enough confidence in the system. Like I'm not, when I look at it, yeah, I'm not actually sure. Yeah, I think it is, but I still like, I'm not, I don't believe myself or whatever it is, and whatever fear it is, you know, why go with 1 trade? What it's not going to move the needle, you know? If you believe this is the way it is, just go with 4 trades, and then add, and then if it works against you, take your max profit and exit. If you can't get your goal, get a dime or a nickel or whatever, but don't hesitate, especially when you are just starting. You are still early. Like for me, early is like 10 trades. Why would I start with 1? Start with 2 or 3, depending on how confident. And I believe the amount of trades you put in, it's a function of how confident you are about the system. And the more trades you put in, it shows that it tells how how confident you are about your trade. You want to add appropriately. I mean, not willy-nilly, like at action points. And it depends if you are in plan A or plan B. It depends if you are on the early, late, or mid game. You need to balance that depending of where you are. Do not miss securing as planned. If there is a place where you have to secure, then secure your trades. Now, if you are in early game, you may want to do let it breathe. I mean, let your, like he says, let your kids grow and go to college. Don't be too tight with securing. You're in early game. Well, what the worst that can happen, you know, you don't have very many trades at stake. You don't have much risk at stake. Give yourself a leeway. While if you are in a mid game or late game, it's a different story. Like if you are in late game, or so as soon as it hits your break even, you may want to secure right there, so you don't want to carry that load again if it goes against you one more time. Give you that chance. After a while, you've been fighting it, gave you the chance, take it. Don't miss that chance. Sometimes on a breakouts, you know, you are at max, or you are at a pivot point and it's gonna break, you know, it's gonna break, comes down. If you are light, early game, you wanna secure after confirmation. Let it pull back and go your way and close. Now you can secure. Now you know it's safe to secure that tight. Otherwise, just let it run. This is not the case if you are in mid or late game. So it could be different. So you want to define what are you gonna do if, and you want to know which level you are in. So you either secure at confirmation or you exit at max profit. That's some of your options. And if you are in plan A, basically most of the time you want to plan how to just get in, get out, and get done. Okay, don't hesitate. Don't start with just itty bitty trade and yeah, it went your way, but you didn't do nothing. I mean, you're just watching it, and nothing is moving. So that's one thing. That's a major thing I learned with this. You want to define your action function of the stage level. So those actions, the securing, take profit, or they all depend on where are you with with the game? Are you in the early? Are you if you are in early game, you can take max profits at first touch. You can look to get your goal. You want to let your profit run. If you are in mid game, now you're thinking, oh, I need to secure. If I can't take my max profit, you watch your break even line more carefully at that level. And if you are in late game, well, you don't want to waste your bullets at that time. Now that's when against you and you're starting to get heavy, you want to reserve your bullets for high probability trades at confirmation levels and save your bullets for a better use. So these are the main things that I have learned from the boot camp. It's nothing new that you guys didn't know that. David has been telling us this for years. The same thing is just to put some more emphasis on it and make it sink or make it, and do it. That's basically, get more confidence. I believe that's just get a little bit more and more confidence. So when you know the system, you get more confident with what you're doing. And I'll open the floor for questions, and you guys can ask me, but David is going to answer.
Let's see, I'm not muted. Eagle says, why start with 4 trades in that 5? Not sure why.
He says, why 4 trades? Oh,
Yeah, I think it wasn't a matter of trades. It was more just being confident is what that's what I took from it.
right.
Right.
Right. And this actually happened. Like I took 1 trade in one of the days and David put 4. He didn't say he put 4 trades. He said after the fact. And then I added a pullback. He added, but he didn't say how much he added, but he was trading the exact same. And then he was done when it reached to the maximum profit. He was at 0.27 and I was at 0.03 because I started with 1 trade, it went up, pulled back, added another trade. It didn't move the needle. That's what I'm saying. Why did I just put 1 trade? I knew or anticipated the market is going to go my way. Why did I just start with 1 EDBD trade? It's like, why? The only reason I have in my mind is because I wasn't sure it was going to go in my way. So if I'm not sure, I'm just going to try and go easy. Well, that's if you make a plan, if you study the plan and you decide this is your plan, at least in my opinion, or for my future trades or things when I do, I'm just gonna do more. I'm just gonna put more trades. If I know this is my plan, I'm just gonna follow my plan. And
I do want to just add something other as a disclaimer, like a PSA announcement really quick, is like I don't think that Haled is advocating go heavier just because you want to make more money. Well, go heavier, right? Because the thing that I worry about is that that's what you guys are hearing. That is not what he's saying, right? He's saying that when you see the setup, have confidence in your setup and play the setup with the right position size that makes the most sense for you, right? And again, that's what we worked on with Haled because he knows how to read market structure. He knows when to take advantage of it. He just wasn't doing it. And so that's what we focused on, is like getting him to believe in his own recognition of the market, right?
Yeah.
And it wasn't like we were jumping in to where it wasn't like we were diving in to where if it went against us 1 or 2 price cycles, we were done. Or you know what I mean? Like we had to get out and do a plan C. No, it was about his position size. And the same thing with gosh, I'm tired. But I think it was Diane today, or was it yesterday? I don't know if it was today or yesterday, but the same thing was with the position size. We talked heavily on position size, right? And if you can't see the setup, you don't have any business going heavy. If you can't fix your trades, you have no business going heavy. But Haled can, and so that's what we worked on his boot camp and for him personally, right? I just want to say that, right?
Yeah, that was we worked on some of my weaknesses in this thing. When I trade manual, you know me. Most of the time I trade using my software programs, my EAs, and but I still have to trade manually. I still want to learn how to do it because you know the more I know, the better. Yes, I do run a lot of EAs in the background. But you know, I want to learn this thing and be able to, you know, get rid of all of my weaknesses or whatever shortcomings that preventing me from being able to do it manually. Example being, I know that funding pips, I can't do anything. I can't copy trade to it, nothing. I have to click manually. I can't even run EAs on it. I had to do it one trade at a time. So and I've been doing it. I've been getting better and better and better. Just you know, past stage one, I'm in stage two now, and hopefully keep clicking and you know, I use it as a training tool because it forces me to train manually and basically with using just basic trade functions. I can't use any automation with it. So that's these are the weaknesses I was working on, and I think through the boot camp I got through quite a bit. These are, even though a few items, they're not major, but they are important. They are important. They make a big difference in the outcome. And so that's a big thing for me. Yeah. I gave the example of 4 trades, like let's say this was part of your plan. I know David does that. He planned this way. He goes with, you know, 10 trades, 10 pips, and he has a goal. He has a system, he has a plan. So if you have a plan and it's going your way, you want to get in, get out, get done, because it doesn't give you very many chances to, it's harder to build than to fade. We know how to fade, and it's sometimes easier. If it goes against you 1 or 2 layers, that's when you build better. At least that's how we are, you know, from
Yeah, and I love I love the fact that Haled, when we were in, it really gave me an opportunity to work with you to really clarify some definitions that you might like. You had a few, and your biggest one was what is plan A and B. So you had a few definitions that were not clarified, right? And so you
right.
might be thinking one way and I'm thinking the other. And so we had a chance to come together and really kind of fine tune what you're thinking and your trading and all that kind of stuff. And so I really enjoyed spending the time with you for sure.
Sure, yeah.
In trading, and it really does come down to you and everybody else is like being able to take advantage of what the market gives, and everything that he has here is, it helps you build to that, right? Having a plan A, plan B, um uh you know, it's kind of, it's everybody has strengths and weaknesses. And and again, like in today's life trading, I think we said Diane's superpower was her patience. And how do you turn what your superpower is into magnifying results consistently? And that's the key. And everybody has it. And we kind of honed in on what Haled's was. Haled's is he can see it, he's just not taking advantage of it.
Right.
Right. And so that was one thing that we worked on with him for sure.
Yeah, one additional comment is second guessing yourself can be harmful. At least in my case, when I second guess myself, and close and try to go the other direction, or so I say, no, I don't want to take anymore. I believe the market is going to go the other direction. And voila, as soon as you change your mind, market also changes its mind, and it's now going the other way. Which
I
is
think
so that was a thing that always I always
one
had.
of I think one of the things that my favorite part was that Haled has programmed so many bots, so many EAs, so many trading things that he's tested, ran backwards, forwards, and sideways. And one of the things is like obviously he lets his bots trade because they don't get the emotional, they don't get to choose, right? They don't have a choice in whether or not they're going to go heavy here or light here, and it makes that choice for him, and so he likes to do that. And so that's one of the things we're picking up on is like, hey, I know you got to be more like, you got to trade more like your bots. The Your bots already know that they're not going to second guess their execution. They don't get a second guess it. Should I or should I not get out? Should I or should I not add a trade here? The execution is already pre-planned and it's ready to fire. And so that's what we talked a lot about in his boot camp is get your execution plan, your plan A, your plan B, and fire just like a bot would do, and live with the results, or whether good or bad, live with the results that happen when you close a trade. But anybody else have any other comments or questions, thoughts, concerns? Maybe not concerns. I'm concerned that it is too late for you and you should be in bed.
It's okay. I
That's
can
my
manage.
concern.
No, it's okay. I'm still okay. Yeah,
Well,
like David said, I do a lot of testing when I can. Like this is this copies to my personal account, runs like on 3 different pairs. This is the bot that's a different bot. That's a trend following bot that's running, and it makes like 0.5% or 1% a day. This is just pure testing. I'm testing this one. And it does 0.92 already and 0.91 in the making. And that's the one David is. I'm testing this one separate. That's what David is testing or running the Autobot. And it made 1% today. So they all clicking, and rubber ducky is beeping all the time in the background. But I still have to trade
no,
manually.
want you to know I got a rubber ducky while I was listening to you. So I'm like, oh, rubber ducky.
Yeah, yeah, it does. It tells you it's happy. My wife was asking me, "What's this?" So I said, "Yeah, when it wins." I said, "What? What is it gonna say when it loses?" I said, "No, it's gonna cry. It's gonna be."
I don't know. I don't know. Let's not experience that.
She was laughing. I was just
Well, thank you very
yeah.
much, Khaled. If nobody else has any questions or anything like that, we'll let him get back, let him enjoy his evening and go to bed. But I appreciate it. Like I said, guys, this is just an opportunity for Khaled to kind of talk about what he's learned. Now, the next thing that I'll add to this for you, Khaled, and everybody else here is like, um, don't don't take this opportunity and dismiss it. Like you said, like implement these things that you need to change in your trading. Do it until it becomes repetitive, because it's just going to make you a better trader, right? And just do it, right? There's no reason why you shouldn't do it, so just do it. And but that, I think that you'll be a better trader in no time. You'll level up and everybody else will level up. And I really am really am a staunch believer in having a plan A, B, and hopefully we don't need to execute C if we execute A and B really good. So thanks guys, and we will see you guys in the morning. So thank you.
Thank you, guys. Yeah, bye.